sheet. Now come to the question number 30. Question number 30 is about the admission of a partner. There are two partners, Suraj and Shrikant are the two partners. They were sharing profit and losses in the ratio of 1:1. It means equally they were sharing the profit and losses. And now they have admitted one more partner, Jairam. So and asked to prepare the revaluation account, partners capital account, new balance sheet. So draw the format. First of all, we have to record in the partners capital account opening balance of the partners. So in the opening balance of the capital of the old partner. So in the partners capital account by balance brought down, it is rupees Suraj rupees 60,000 and then Shrikant rupees 40,000 and Jairam dash because he's a new partner, no opening balance of the capital. Then if there is a reserve fund, we have to distribute among the old partners reserve fund as per the old profit sharing ratio. Old profit sharing ratio is equal. So reserve fund is 15,000. So that we have to credit by reserve fund 7,500. And if after that we have to see what are the adjustment. So here Jairam is bringing 50,000 towards capital and 25,000 towards the goodwill, and goodwill has to be treated as per the accounting standard 26. So that amount has to be first credited to the Jairam's account. So therefore in the partner's capital account by bank account, Jairam's capital account credited by bank account rupees 75,000 rupees. So out of that 75,000, 25,000 is the goodwill. It is distributed among the old partners as per the old ratio. If sacrifice ratio is not given, it is distributed among the old partners as per the old ratio. Old ratio is equal. So therefore by Jairam's capital account in the column of Suraj 12,500 and in the column of Shrikant 12,500, and the same amount has to be debited to the Jairam's capital account. So therefore Jairam's capital account debtor to Suraj capital account 12,500 to Shrikant capital account 12,500, and thereafter some revaluations are done. So that should be recorded in the revaluation account. The first one is machinery is depreciated. So in the revaluation account on debit side, because it is a loss to the firm, it has to be recorded on the debit side. Machinery account 10% of the 15,000 means it comes to 1,500. Then increase PDD by 4,000. There is an old PDD of 2,000 now increased by rupees 4,000 means it was 2,000 now it is made 6,000 means it is increased by 4,000. That is increase in the loss that should be recorded on the debit side. So 2 PDD 4,000 rupees. And then buildings are revalued 1,20,500. Earlier building was 92,000. Now revaluation is made 1,20,500 means the value of the building is increased. It is a profit. So therefore recorded on the credit side 1,20,500 minus 92,000, it comes to 28,500. So by building 28,500. Then total debit side and credit side would be more 28,500. Record both this side 28,500, find out the difference come to 23,000, and this is the net profit on the revaluation. It has to be distributed among the old partners as per their sacrifice ratio, that is equal. So therefore to old partners capital account Suraj 11,500, Shrikant 11,500, and it has to be recorded on the credit side of the partners capital account by revaluation account 11,500, and then we have to close the partners capital account. Total each partner's capital account, it comes to 91,500, 71,500, 75,000. Record on both the side. Find out the difference. The difference come to Suraj 91,500, Shrikant 71,500, and Jairam 50,000. Now prepare the new balance sheet. Balance sheet as on 1/4/21. So cash at bank, it changes because earlier there was a cash in hand 30,000 and now 75,000 rupees brought by the new partner. So 35 plus 75 it comes to 1,05,000. And stock, there is no change in the stock 25,000, and debtors there is adjustment, debtors 40,000 less PDD. New PDD means earlier it was 2,000, now it is increased by 4,000. 2,000 plus 4,000 it means it comes to 6,000. So debtors 40,000 less PDD 6,000, then the net debtors would be 34,000. Then furniture there is no change 20,000. Machinery there is adjustment 15,000 less depreciation 1,500, it comes to 13,500. Then building revalued, earlier it was 92,000, so 92,000, now it is revalued as 1,20,500. Directly you can write 1,20,500, or you can write building inner column 92,000 plus 28,500, total outer column 1,20,500. Then patents there is no change 20,000, 20,000. And on the liability side, creditors 80,000. So 80,000, it is misprinted, now it is made 80,000. So creditors 80,000, bills payable 45,000, and reserve fund, there is no need of recording reserve fund because it is already distributed among the old partners. And then capital, closing capital of all the three partners. So Suraj, it comes to rupees 91,500 and Shrikant 71,500 and Jairam 50,000. Total both the side, it comes to 3,38,000. And the allotment of the marks would be 3 marks would be allotted for a revaluation account, and for partners capital account 4 or 5, and for balance sheet 5 or 4. So they adjust 1 mark here and there as per the number of days. Now question number 31 is on the retirement. Here also you have to prepare the revaluation account, partners capital account and balance sheet. First we shall see the partners capital account. In the partners capital account you record the opening balance of the partners. All partners are the old partners here. The opening balance of the capital, Raju 15,000 and then Arun 15,000 and Shambhu 15,000. And there is a general reserve. It has to be distributed among the partners as per the ratio of 3:2:1. So therefore by general reserve it comes to 6,750, 4,500, 2,250. Then after that, goodwill of the firm. So I see the additional information. Goodwill of the firm is valued at rupees 18,000. Total goodwill is 18,000. Out of that, retired partner share is Arun's share is 2 upon 6. So total goodwill of the firm is 18,000. So 18,000 into 2 upon 6 means it comes to rupees 6,000. And this 6,000 rupees goodwill amount should be contributed, should be borne by the among the continuing partner, not old partners, continuing partners as per the gain ratio. If gain ratio is not given, then the old ratio of the continuing partner itself would be considered as the gain ratio. So the old ratio is 3:1. So therefore gain ratio is also 3:1. If 6,000 rupees is distributed among the continuing partner Raju and Shambhu, it comes to 4,500 and 1,500. So therefore see here, Arun's capital account credited by Raju's capital account 4,500, Arun's capital account credited by Shambhu's capital account 1,500, and this amount has to be debited in the continuing partners account. See, in the Raju's capital account is debited to Arun's capital account 4,500, and in Shambhu's capital account letter to Arun's capital account 1,500. Then outstanding expenses is revalued to 3,500. Earlier it was 4,500. Now it is reduced to 3,500. It is the profit for the firm, so record it on the credit side of the revaluation account. By outstanding expenses, 4,500 minus 3,500, it comes to 1,000 rupees. Then machinery and loose tools are to be valued at 10% less than the book value, means it is a loss to the firm. So therefore on the debit side, machinery 800, 10% means, and loose tools 400. And thereafter factory building are to be revalued at rupees 24,300. Earlier it was 22,500. So now it is revalued at rupees 24,300. There is an increase of rupees 1,800 in the factory building value. So therefore it is a profit. Record it on the credit side of the revaluation account. So 1,800 factory building. Now total credit side is more, 2,800, record on both the side, find out the difference 1,600, and this 1,600 has to be distributed among the all the partners as per the old profit sharing ratio. So two partners capital account, Raju 800, Arun 533, Shambhu 267. It has to be recorded in the partners capital account on the credit side. So by revaluation account, Raju 800, Arun 533, Shambhu 267. So now Arun is retired. First his account should be settled. So total his account on the credit side, it comes to 26,033. Record on both the side, find out the difference, and that difference should be transferred to his loans account. So Arun's loan account 26,033, and remaining partners capital account close. The total balance, the total of the credit side would be 22,550 in case of Raju, and to 17,570 in case of Shambhu. Record on both the side, find out the difference. It comes to Raju 18,050 and Shambhu 16,017. Then prepare the balance sheet of the new for as on 1/4 as at 1/4/2021. Cash at bank, usually in the retirement there will be no change in the cash at bank, so it is same 9,500. Then debtors, no change 15,000. Then stock, no change 12,000. Then building, there is a change. Earlier it was 22,500, now it is revalued 24,300. Then machinery, there is a change, 8,000 less depreciation 800, it comes to 7,200. Loose tools change, 4,000 minus 400 is the decrease, so outer column 3,600. Creditors, no change. Bills payable, no change. And outstanding expenses change. Earlier it was 4,500, now it comes to 3,500. And Arun's now new liability is Arun's loan 26,033, and capital of Raju 18,050 and Shambhu 16,017. So total both the side 71,600, 71,600. Here also allotment of the marks will be revaluation 3 marks, partners capital account 4 or 5 marks, then balance sheet 4 or 5 marks. Now question number 32, it is on the dissolution. Prepare realization account, partners capital account and bank account. Draw the format of the realization account, partners capital account, and then the bank account. First of all, record the opening balance of the capital of all the partners in the partners capital account by balance brought down. Here partners are Abdul, Babu and Chandru. So record the opening balance 40,000, 30,000, 20,000, and there is a reserve fund, distribute reserve fund as per their old profit sharing ratio. As per their profit sharing ratio, their profit sharing ratio is equal, so 12,000 equally distribute 4,000, 4,000, 4,000. And thereafter there is a cash at bank 6,000, record in the bank account on the debit side, to balance brought down 6,000. And after that all the realizable assets except cash at bank and cash in hand, all other assets have to be transferred on the debit side of the realization account at their gross value. So 2 bills receivable, 2 debtors, stock, investment, furniture, building. And likewise, all the outside liabilities should be recorded on the credit side of the realization account. Creditors 12,000, bank loan 24,000. And then Abdul's loan is there. It is not the outside liability. It is the partner's loan. It has to be paid directly. So record it in the bank account on the credit side. Just leave some space to record the payment of the other outside liabilities. Just leave the space. Then you record A's loan account 22,000. And thereafter, here information is given how much amount is received from different assets that we have to record in the bank account as well as in the realization account. Here, cash comes into the business, so therefore we have to debit the bank account and credit the realization account. It is better to first record on the credit side because we get the list of the assets of the firm on the debit side in the realization account. So it would be easier to compare whether all the assets are sold or not. So therefore, in the realization account, on the credit side, write by bank account. In bracket, you can write assets realized or assets sold. So from bills receivable, amount received is 5,000 and debtors 23,500, stock 18,500 and building 95,000. So see here, 1, 2, 3, 4, 5, 6 assets are there, but out of that 1, 2, 3, 4, only 4 assets are realized. It means still 2 assets are there. So those assets either partners might have been taken or it might have been adjusted to the creditors. That information will be given to you in the problem. So here it is clearly given investments were taken by the Babu and furniture were taken by the Chandru. So except investment and furniture, all others are assets are sold. So from that we got these amount. So total the amount 1,41,500 and record it 1,41,500 in the bank account on the debit side to realization account bracket assets realized 1,41,500. So after that we have to make the payment of outside liabilities, whether it is mentioned in the question or not. We have to mandatorily compulsorily it has to be paid. So therefore, on the debit side, record 2 bank account in the bracket liabilities and resolution expenses. Creditors full amount is paid 12,000 and bills receivable bank loan 24,000 and resolution expenses 2,500 is given. So total 38,500. It has to be recorded in the bank account on the credit side. So on the top where we have some space is provided for that. So on the top you write by realization in the bracket the liabilities and the resolution expenses are paid 38,500 rupees. And thereafter 2 assets are taken by the partners. So those partners capital account has to be debited. So therefore, partners capital account debtor to realization account. Babu has taken Babu has taken investment. So record 10,000 in his column, and Chandru has taken furniture for 8,000. So record 8,000 in his column. So therefore, Babu's capital account debtor to realization account 10,000. Chandru's capital account debtor to realization account 8,000, and the same has to be recorded in the realization account. Realization account credited by Babu's capital account 10,000. Investment taken, and by Chandru's capital account 8,000 furniture taken. Thereafter you total debit side as well as credit side of the realization account, find out which side is more. So here credit side is more 1,95,500, record it on both this side 1,95,500, 1,95,500, find out the difference 3,000. So it is the net profit on the realization. It has to be distributed among the partners as per their profit sharing ratio. So 2 partners capital account A, B, C or Abdul, Babu and Chandru 1,000, 1,000, 1,000. It should be shown on the credit side of their capital account by realization account 1,000, 1,000, 1,000. And now total, if you total A, B and C are Abdul, Babu and Chandru, it comes to 45,000, 35,000, 25,000. Record on both the side, find out the difference. So that difference amount would be paid, refunded. So therefore, for difference we have to write to bank account. Abdul 45,000, then Babu 25,000, and then Chandru 17,000, and the same amount is recorded in the bank account on the credit side by partners capital account ABC 45, 35 and 17,000. Now total the bank account both the side would be same 1,47,500, 1,47,500. Here the allotment of marks would be for bank account they may allot 2 to 3 marks, and for partners capital account 4 to 5 marks, and for realization 5 to 4 marks. Then question number 33 is on the issue of the shares. So here the name of the company is Surya India Limited. It has issued 20,000 preference shares of ₹100 each at a premium of ₹10. So the amount payable is 20 on application, 50 on allotment, 40 on first and final call, and all the shares were subscribed and the amount is duly received except on 1,000 shares. So you pass the general entries for issue of shares as well as for forfeiture of shares, because those 1,000 shares are cancelled and reissued at ₹90 each. So there would be 9 journal entries. So first one is for receipt of the application money, bank account debtor, to preference share application account 20,000 into 20 rupees, it comes to 4 lakhs, 4 lakhs. Then second entry is for transfer of the application money, preference shares application account debtor to preference share capital account 4 lakhs, 4 lakhs. Then third is for allotment money due including premium. So the journal entry is preference share allotment account debtor 10 lakh to preference share capital account 8 lakh to securities premium account 2 lakh. And then fourth entry is for the receipt of the allotment money bank account debtor to preference share allotment account 10 lakh, 10 lakh. And fifth entry is for first and final call money due preference share first and final call account debtor 8 lakh, 8 lakhs. Then for receipt of the first and final call money bank account debtor preference share first and final call account 7 lakh 60,000, 7 lakh 60,000, because on 1,000 share final call is not received, so therefore amount is decreased by 40,000. Now seventh is for cancellation of the shares. For feature of the shares, the journal entry is preference share capital account. How many shares are cancelled? 1,000 into amount paid up is 100. So 1,000 into 100 is equal to 1 lakh. And then there is a forfeiture of the amount received so far. So here amount received so far is 20 rupees on application and 40 rupees on allotment. Total 60 rupees is received on 1,000 share. So that is credited to the special account, that is a forfeited share account. So therefore the credit forfeited share account to forfeited share account 60,000. And now we have to cancel the amount outstanding in the preference share first and final call account, that is the 40,000 rupees. So therefore credit the preference share first and final call. So the journal entry is preference share capital account debtor 1 lakh to forfeited share account 60,000 to preference share first and final call account 40,000. And the same shares are reissued at rupees 90 each. So the journal entry is bank account debtor 1,000 into 90 is equal to 90,000 rupees. There is a discount of rupees 10,000. So that should be adjusted from the forfeited share account. So forfeited share account debtor rupees 10,000 to preference share capital account 1 lakh. Then last journal entry for transfer of the remaining balance of the forfeited share account to the capital reserve. So journal entry is forfeited share account debtor 50,000 to capital reserve account 50,000. Out of 60,000, 10,000 discount is adjusted. The remaining balance of 50,000 is transferred to the capital reserve account. For each common entry there will be 1 mark, and for compound entry 2 marks will be. Then question number 34. Question number 34 is about the debentures. So here 4 different situations are given. For each situation you have to pass the 2 journal entries. First one is for receipt of the application and allotment money, and second one is for transfer of the money to the debenture account. Here situation A is 20 rupees 2 lakhs 10% debentures of rupees 100 each at par and redeemed at premium. So here debentures are issued at par, but it is redeemed at a premium of 5%. So 2 journal entries have to be passed. So therefore I have written A into bracket 1 for receipt of the application and allotment money. The journal entry is bank account debtor to 10% debenture application and allotment account 2 lakh, 2 lakh. Then it has to be transferred. So the entry for the transfer is number 2. Second entry is debenture application allotment account debtors 2 lakh, loss on issue of debenture account debtor 10,000, because these debentures are redeemable at a premium of 5%. So therefore there would be a loss of rupees 10,000. It has to be transferred to the loss on issue of debenture account. So therefore loss on issue of debenture account is debited. Then 10% debenture account 2 lakh, then 2 premium on redemption of debenture account 10,000. It is a reserve account, it is a provision made. So therefore 10,000 is credited to the provision account. The name of the provision account is a premium on redemption of debenture account. In case number B, here debentures are issued at a discount and redeemable at par. So the first journal entry for receipt of the application account, application and allotment money, the account, the journal entry is bank account debtor 1,90,000, 1,90,000, because discount of 5%. So discount of 5% on 2 lakhs, it comes to 10,000. So 1,90,000, 1,90,000 bank account debtor to debenture application and allotment account. Then second entry for transfer. So second entry is 10% debenture application allotment account debtor 1,90,000. Then discount on issue of debenture account 10,000 to debenture account 2 lakhs. Then C, situation C, here debentures are issued at premium and redeemable at par. So first entry is for receipt of the application and allotment account, bank account debtor 2,10,000, 2 lakh plus 10,000 premium. So bank account debtor 2,10,000 to debenture application and allotment account 2,10,000. And for second entry for transfer of the debenture application and allotment money to the securities premium as well as to the debenture account. The journal entry is the debenture application and allotment account debtor 2,10,000 to 10% debentures account 2 lakh to securities premium 10,000. Then last situation, here debentures are issued at premium and redeemable at premium. In both the case premium. While selling also we are taking the premium, and while buying back also we are giving the premium. So the journal entry for receipt of the application and allotment money is bank account debtor 2,10,000 to debenture application and allotment account 2,10,000. 10,000 premium you are taking. Now second entry is for transfer of the amount. First 10% debenture application allotment account debtor 2,10,000. Loss on issue of debenture account 10,000. It is a loss to company because premium is payable on the redemption. So it has to be debited to the loss on issue of debenture account. So therefore, once again I will tell you, 10% debenture application allotment account debtor 2,10,000, loss on issue of debenture account debtor 10,000, to 10% debenture account 2 lakh, then to premium on redemption of debenture account 10,000, then to securities premium account 10,000. So in this way you have to record the general entry. Number 35. Question number 35 is on the comparative balance sheet, preparation of the comparative balance sheet. So here informations are given relating to 2020 and 2021. First of all, you prepare the format comparative balance sheet as at 31st March 20 and 21. So 1, 2, 3, 4, 5 columns are required. First column is particular, and second is for 2020. Third is for 2021, and then absolute increase and decrease, then increase and decrease in percentage. First of all, using the information given in the question, you write down all the information as per the format, as per the company's active. So there are two sections in the balance sheet. First section is the equities and liabilities. In the equities and liabilities, first heading is shareholders fund. In shareholders fund, first one is the share capital. So share capital in the 2020 4 lakhs and 2021 5 lakhs. So absolute increase is 1 lakh, and then reserve and surplus it was 50,000 in 2020 and 60,000 in 2021. So absolute increase is 10,000. Then non-current liabilities are given. So non-current liabilities means secured loans are given. So non-current liabilities is rupees 15,000 in the 2020. Now it is 20,000. So there is an increase of 5,000. Then current liabilities 50,000 and now it is 70,000, increase of 20,000. Total for 2020 it comes to 5,15,000. For 2021 it comes to 6,50,000, and absolute increase or decrease it comes to 1,35,000. Percentage we shall calculate afterwards. Like with the asset side, first you write the assets. Out of that assets, first heading is the non-current assets. In the non-current asset, first one is the fixed assets. In the fixed asset, first one is the tangible asset, that is the building. It was 2 lakh, now it is 2,50,000. The absolute increase is 50,000. And machinery, it was 1,50,000, now it is 2 lakh. The absolute increase is 50,000. And current assets, out of current assets, inventory 1 lakh, now it is 1,10,000, so increase is 10,000. And trade receivable, it was 65,000, now it is 90,000, so increase is 95,000. And now calculate the percentage. To calculate the percentage, you have to take the absolute increase or decrease amount. So in case of first share capital, the share capital increase 1 lakh. And in the 2020 it was 4 lakh. So 1 lakh upon 4 lakh it comes to 25%. Likewise for reserve and surplus, absolute increase is 10,000 upon, in the 2020 the base is the 2020. So the 2020 in the year 2020 it was 50,000. So 10,000 upon 50,000 it comes to 20%. Likewise you calculate percentage for each item. So here 1.5 marks would be given for each item if correctly recorded, it properly recorded. Then question number 36 is about the ratios. So 6 different ratios are asked. You just first write down the formula, then fill in the figures and find out the ratios. First one is the inventory turnover ratio is equal to cost of revenue from operation upon average inventory. So cost of revenue from operation is equal to revenue from operation minus gross profit. Revenue from operation is 10 lakh minus gross profit is 2 lakh, it comes to 8 lakh. So inventory turnover ratio is equal to 8 lakh upon 1 lakh, it comes to 8 times. Then trade receivable turnover ratio is equal to net credit ratio, net credit revenue from operation upon average trade receivable. So net credit revenue from operation is 6 lakh upon average trade receivable is 1,50,000, it comes to 4 times. Then likewise trade payable turnover ratio it comes to 2 times, and gross profit ratio it comes to 20%, operating ratio comes to 90%, net profit ratio it comes to 10%. Now we shall come to practical oriented section. Here 4 questions will be asked. Out of that you have to answer only 2. So question paper, question number 37 is you have to classify the following 5 items given into capital and revenue. So first item, subscription is given. It is